Hey everyone, Richard here. I just wanted to make a quick update about Warren Buffett's Berkshire Hathaway. They just put out their third quarter financials, and in there we discovered that they recently have been purchasing back $9 billion worth of their own stock. So I want to talk about what that means, and also, is Berkshire Hathaway still a buy right now? Okay, so they've bought back $9 billion worth of stock in the third quarter of 2020. Okay, so first I'll quickly recap why a company would even buy back their stock in the first place. And basically, a real simple way to put it is it's basically an alternative to paying out dividends. So a company earns money, and now with that money, they can basically do any one of 5 things. Reinvest into existing operations to ideally make more money in the future, pay down debt, acquire other companies, pay a dividend, or buy back its own stock. So yeah, one way of looking at it is that it's an alternative to paying dividends. It's a way of returning value to shareholders. Now the way specifically that works is basically as the total number of shares outstanding decreases, my percentage of ownership and whoever else is still left holding those shares, their percentage of ownership in that company increases. One of the issues with dividends is it's not very tax efficient because when the company earns that money, they have to pay taxes on it. And then when you pay it out to the shareholders have to pay taxes on it because it's income for them as well. So basically one of the benefits of stock buybacks is the reduction of that double taxation. Now stock buybacks aren't always a good thing. Sometimes greedy CEOs, or maybe not even necessarily greedy CEOs, but maybe just CEOs who don't really understand capital allocation properly, they might buy back stock at a time where the stock is not undervalued, but in fact even overvalued, and they're buying back stock at a bad time. But in Warren Buffett's case, we don't have to worry about that. He wouldn't be buying back stock unless he thought that Berkshire Hathaway was undervalued. So the question is it still undervalued, and should you be buying some today? Because if Warren Buffett thinks it's undervalued at this price, then chances are it just might be. Okay, so that $9 billion of stock was basically $2.5 billion of Class A shares and $6.7 billion of Class B shares in the third quarter of 2020. Okay, so this means between buying back A shares and B shares, they've spent $16 billion buying back stock over the past 9 months. Time and time again, Buffett has made it clear that he would only purchase back stock if he felt that the intrinsic value was much higher than the current price. And intrinsic value, that's just as they estimate it. So it's not like a number that you can go look up somewhere. Intrinsic value is something everybody has to calculate for themselves. Warren Buffett would have a pretty good idea of what he thought the intrinsic value of Berkshire Hathaway was. So if he went and looked up a stock quote and see Berkshire Hathaway is trading for actually much lower than I think it's worth, then that would be a potential time to buy back stock. Essentially, that's what's going on. So he thinks that it's been cheap recently, and that's what he's been doing. Now, that's not to say that there's nothing trading on the stock market that he might not think is cheaper, but one of the things with Berkshire Hathaway is that their universe of investable stocks is actually much smaller than us small-time investors that don't have billions of dollars to invest. When you have billions of dollars to invest, you can only really look at companies that have huge market caps, because say you want to buy 10% of a company, well, if it's only a $100 million company, it's gonna be really difficult to buy 10% of that company. It might take months to buy up those shares, and even then that's only $10 million. And if you have billions of dollars to invest, really you're not even looking at a company that has a market cap of only 100 million. So basically his universe of investable stocks is much smaller than you and I. And so within his universe includes his own stock, of course, and basically he thinks it's the best place to allocate money right now, especially since they're sitting on a lot of cash. So now let's talk a little bit about valuation and break that down in just a real simple way so we can answer the question of, is Berkshire Hathaway still a buy at this price? So the market cap for Berkshire Hathaway at the end of the day on Monday, November 9th was $525 billion. And market cap, by the way, is just the price per share times the number of shares outstanding. So you can think of this as the valuation that the market is putting on Berkshire Hathaway. That's the price tag on Berkshire Hathaway, $525 billion. So what do you get for $525 billion if you were to buy Berkshire Hathaway for this price? Let's look. Okay, so for one thing, it comes with a huge stockpile of cash, $145.7 billion of cash and cash equivalents. So that's one thing that you're getting under the $525 billion price tag. And then also you're getting a $245 billion stock portfolio. They own just under 6% of Apple. They own 11.9% of Bank of America, 9.3% of Coca-Cola, 18% of American Express, Kraft Heinz, Moody's Corp. Basically a massive stock portfolio. So if the price is $525 billion, it comes with basically, let's think of it as a free equities portfolio of $245 billion. So that brings us down to $280 billion. And then also Berkshire Hathaway owns a number of operating businesses, wholly owned businesses. So to give you an idea of the operating earnings over the past 12 months for those businesses that Berkshire Hathaway is 100% owner of. Over the past 12 months, that's been just over $21 billion in operating earnings just from the wholly owned businesses that Berkshire owns. So under that $525 billion price tag, you're also getting these operating earnings, which I think will continue to grow between 5 and 10% per year moving forward. So even if you put a 15 times multiple on those earnings, that would be $319 billion that $21 billion of earnings would be worth. And I think probably it'd be worth more than $319 billion. So yeah, I'm thinking maybe buying Berkshire at this price, you might get a 10% ROI on the equities portfolio. And then for like $280 billion, if you're not including the cash, you are getting the operating earnings of 21 billion-ish. And I think probably it's not unlikely that you could earn maybe 15% on that. So between the 10% you might earn on the equities portfolio and the 15% you'll earn on the operating businesses, I think overall buying Berkshire at this level will give you somewhere between 10 and 15% annual returns moving forward. That's just a very rough estimate. Remember, I'm not a financial advisor, just a guy on YouTube. So definitely do your own due diligence and your own research and your own critical thinking before you make any decisions on this. Now, the other cool thing that I think is worth showing you right now is how their shares outstanding have looked over time. So take a quick look here. You can see that only really very recently has stock buybacks even really become a tool that they've been utilizing. Now, if they start to act at all like Apple has over the past few years, that'd be kind of very cool. Take a look at Apple's shares outstanding over time. So you can see over the past few years, they've been pretty aggressively buying back stock. And if we add the price into this graph so we can see the shares outstanding in relation to the price over time, we can see that the rapid increase in price is very highly correlated with the very aggressive repurchasing of stock. So that's pretty cool, and it'd be interesting if Berkshire took a similar approach since their universe of investable securities is so small these days, and since everything is pretty expensive as well, Berkshire Hathaway being quite fairly priced, it seems, maybe even undervalued depending on who you are, what type of returns you're looking for. It'd be interesting to see if Berkshire Hathaway starts to buy back a lot of stock even more aggressively over the next few years. That would be quite interesting. And the next video of mine that I think you should watch if you're interested in learning how to calculate the intrinsic value of a stock is this video right here, where I go into detail with a spreadsheet. I also show the IRR formula, where basically you can calculate what expected annual returns you can get. I also include a bunch of Warren Buffett and Charlie Munger clips talking about how to calculate intrinsic value. It's a really awesome video, so check that one out here. Or otherwise, one way or another, I'm sure I'll see you in another video. So have a great day, and thanks for watching.